In last video, I was talking about a successful financial plan for your family when you are with them and even after your life. For making this plan working freely and finally for you, there are a lot of points one have to consider and keep in his mind continuously, like your financial plan, increase your spendings due to increase in inflation, or increase in shopping due to improvement in lifestyle, or children's higher education in abroad. First of all, this plan is no magic, so it will take time, a considerable amount of time to show its powerful effect. It may take years for you to achieve your financial freedom. Yes, years, maybe decades. Next is, one has to change some of his or her habits. Now, it can be frustrating sometimes because you may not know how to change something that is almost eternal for you. Obviously, you have grown with your habits. For example, try to think before buying anything that whether you need this or you want this. There's a book called Rich Dad Poor Dad, and there's a famous line I quote for you from that book. Today, if you buy things you don't need, tomorrow you have to sell things you need. Next is, you have to develop a discipline of managing money. This shown here is a rough checklist to help you. If you think that I'm going to tell you the same old boring stuff about long-term investing, then you have guessed wrong, my friend, about the video. Just wait for a while. This video isn't about making you rich. Actually, it is about making you financially invincible so that you're not broke in any situation. Now, making you financially invincible is not a one-day task because it's not a get-rich-quick scheme. It is an ongoing process of discipline until you grow old. But creating the system or plan will take a shorter time. Let's say 2 years or 3 to establish. But once it is established, it keeps on improving itself and empower yourself. Have you thought why health insurance before term plan? First thing in your plan should be health or medical insurance for you and for your dependents. Now you may think, why health or medical insurance? Why not life insurance? Well, the answer is very simple. Chances of someone's death is far lesser than chances of him or any of his family member becoming sick of some critical disease. Second thing is to take a life insurance if you are the only financial arm for your family. Now, I understand that this will not fulfill your absence, but to some extent, it can compensate your financial presence. We'll talk about this insurance later in coming videos. Or else, read the book Let's Talk Money by Monica Halan, chapter 4 and 5. Third thing is to create emergency protection fund. Now, this should be as liquid as possible, but I won't suggest FD or cash and savings account. Well, you've already seen 2% savings, 2% interest in state bank savings account. I mean, what does that even mean? This can be in liquid fund, debt fund. More details about the fund will be in coming videos. After achieving above goals, one can think about investing. Now come to investing. Mutual funds or precisely index funds are the best passive options. This is a rough checklist about starting your journey. Now I'll show some interesting calculation about return on investings.
Passive investing is the investing where the investor wants a relief from researching each and every scrip or security or commodity he is investing, in addition to a better return in long term, at least better than FD, savings and debt fund also. Nowadays, synonyms of passive investing have become index funds. What are index funds? Let's check. If you will search here Nifty 50 CAGR since inception, then in the very first row of the search result you can clearly see then since inception in November 1996 the Nifty Next 50 has delivered an annualized return of 17.2% as compared to 12.2% of Nifty 50. So what is Nifty Next 50 and Nifty 50? These actually are the index. You can definitely find some index funds connected to this. You can directly find index funds on coin, that is Zerodha's website. You will have to search Zerodha coin. Here on the very first row it is showing coin by Zerodha. Here you will search Nifty 50. Now you can see there's a list. Let's check HDFC Index Nifty 50 Plan Direct Plan Growth. What is the meaning of growth? What is the meaning of direct plan? It will be discussed in coming videos. First of all, we will see the returns. Here it is seen internal rate of return is 15.31 absolute profit is 102.69. What is absolute profit? This is the total profit since inception in absolute terms. This is the per year return since inception of this fund. What are the things to be seen before buying any mutual fund? We will check it in next video, in coming video. If you want those details, let me know in the comment section. On the very first page where we have searched the CAGR since inception of Nifty 50, you can see there is a return. Let's consider not 17, not 12. Let's consider 15% CAGR growth. Now we can check here SIP calculator. You can calculate on any website. Let's check on SIP calculator from grow.in website. Let's enter the monthly installment. We enter here 10,000. Let's expect 15% from our investment. And the period is 30 years. You can clearly see that when your monthly investment is 10,000, expected rate of return of your index fund is 15%, and the time period is 30 years. I mean, for 360 months you have invested 36 lakh rupees. Your estimated returns are 6 crore 64 lakh 98,206, and you will get this rate of return easily when you are investing in long term. Maybe more, maybe somewhat less, but it will nearly about 15%. And this is plain 15% return when you are doing a passive investing, not active investing. It means that you are not doing regular research, you are not regularly exiting or entering some funds. This is the simplest index fund. That is the magic of SIP, that is the magic of compounding, that is the magic of investing for long term. We'll talk about SIPs later in coming videos. Till then, thank you, bye.